Welcome, everybody. Ladies and gentlemen, thank you for joining us today on a growth scaling panel. Well, we have a lot of things to discuss. So the journey of an entrepreneur starts with an idea, and then once you have the idea, you go and find an angel to invest with you, or you find friends and family to invest, and then you find a team, hopefully, around then. And then when it comes to Series A, you are super lucky, pumped up, you have the whole thing, and then comes a giant. So you already went from a small idea to a sizable company. Now what? So we are actually going to talk about fintechs in growth stage. And I have an amazing panel here with different perspectives. So I will first have them introduce themselves. We did sit with our pictures, so you can actually take note of everybody. Eyad, can you please introduce yourself?
Hello. Hi, everybody. Thank you again for being here. My name is Eyad Albayouk. I head up Flat Six Labs operations in Saudi Arabia. We're an early stage investor. We start at the pre-seed stage and go all the way up to pre-series A. And it's great to be here.
Hi, my name is Sonia Gokhale. I'm one of the founders and general partners at VentureSouq. We're early stage investors, and we specialize. We have a fintech specific fund that we're deploying out of.
Hi, I'm Amy Oldenburg. I head our emerging market equity business at Morgan Stanley. I also have a dedicated digital asset team, and I'm an independent director for a fintech based here in Dubai, Abi, which is an open finance platform.
Hi, I'm Alper Çelen. I'm a different kind of investor. I'm the founder of Enhanced Ventures. It's the original venture studio in the region. So on one hand, we invest. On the other hand, we help build the companies.
Great. So I'll stick to this. So I will start with the challenges of fundraising. I know, Sonia, you have a fintech fund dedicated only to fintechs in MENA region, and you have done a great first fund, and you have the second fund now. So can you tell a bit about the journey of startups in MENA region in fintech?
Yeah.
And how the early stage is different than growth stage?
Absolutely. So we launched our first fintech fund in early 2021. And at that point in time was a very different, capital raising environment than it is now. And a lot of our companies are now growing and getting to the growth stage phase of it. And this region has a lot of funding for the early stage. Oh, sorry. This stage has a lot of funding for the early stage companies. So you've got funds that are focused on seed, Series A. And so in that area, I think we're pretty well, we're good. The later stage, I think, is a big challenge in the region. And we tend to see a lot of global investors that come in at the later stage. So in our portfolio, we've had a few that came in, like Sequoia has come in with Tabi's last previous round, like a year ago. We've had Sequoia come into Hasbi, but even though that was at their Series A, we're getting to see a lot of global attention in this market, but we need that global capital for the growth stage opportunities. I think it would be good, and now I think we're beginning to see that now. Some of the local funds, like the sovereigns, are looking at the growth stage opportunities now, and I think they're going to fill in that gap to some extent. But that's been a challenge for us because you have to get the attention of a global fund that will invest in the later stage for you.
And Eyad, is it possible for you to speak a bit about the journey of a fintech in Saudi Arabia?
Definitely, Saudi is a bit unique in the sense that, of course, there's a very active and quite powerful regulator by way of the Saudi Central Bank and, of course, the Capital Market Authority. Within the early stage environment, it's always a chicken or egg scenario when it comes to that specific founding team having, of course, secured the license and regulatory permit required to start operating. So of course, from a funding perspective, it's always a back and forth between founding teams and investors as to whether they come in pre-regulatory approval or post-regulatory approval. What we've seen a lot of founders do is just migrate towards the angel investment community and family and friends. Because as you can imagine, the due diligence there is a bit more fast-paced if it exists at all. But that still remains the largest hurdle and challenge, of course, for smaller early stage type of founding teams that are coming with ideas into the KSA market. And of course, I second everything that Sonia said with regards to VC funds and institutional investors available to fund these companies post regulatory clarity, let's say. So once they secure the license, the permit, of course, the appetite and the dry powder is there. However, it's short-lived, and oftentimes by Series B, there's that valley of death where you kind of need to plug in that hole somehow, and that's where international players come in.
Alper, you created not only one startup, but many in your studio, and you deal with fundraising the most. There's a plane. What do you see as the challenges of a startup in this region, raising a seed fund and then raising early stage to all the way to B and hopefully C?
So first, I think I have this really bipolar existence in that, you know, on any given day, I sit on both sides of the table, right? Because we're investors. We invest in the ventures that we start from scratch through their ideation, validation, creation, growth phases in that first year. And then we have to switch to the other side of the table and raise money and, you know, get them a Series A as they spin off of the studio. I think there are, two answers to your question, Gözde, in that one answer is like, what is the normal typical challenges that we see in this region or globally? And then what has been the case in the last year and a half through this VC winter. I think, unfortunately, I'm an electrical engineer. I mean, you're building an amplifier, you have to make sure that you have enough dampening, otherwise you get this like feedback if I put this microphone very close to the speaker. I think the VC ecosystem globally doesn't have that dampening effect. And we end up going too high, too low, too high, too low. And we're in one of those lows right now, hopefully coming out. Maybe you would know better with a global view, hopefully coming out, you know, in the next few quarters. But some challenges are common. I think from our point of view and why we do a studio, generally, in an emerging market, the team and the idea quality is not as good as it should be. Typical story of a founding of a venture is two best buddies, they work at the same job, they hate the same boss, right? And they go for coffee or beer if you're in Dubai. And they say, hey, I hate this boss, why don't we quit? We built something like this, I will jump first, you come join 6 months later. And that's how a team is formed and how ideas come to life, over coffee, over beers. And is that the best way that we human beings have come up with, like how to innovate? Right? So we think there's a better way. But one of the main challenges remains, whether in the VC winter or out, is that quality of the early team and the ideation process. It's not methodical and scientific enough. Then what it leads to is, as Eyad was saying, in very early pre-seed, seed, you can still get by, right? Because you're enthusiastic, you have family and friends, you have a network of investors, angels, family offices that are going to bet on you. But then you come to a growth stage, Series B, suddenly your enthusiasm and your PowerPoint presentation is not good enough. It has to be backed by numbers. And that's the valley of death that ends up happening. And I think probably gets, to happen a bit more in emerging markets like this.
Thank you. And so let's say you actually went through all this and secured funding, and you have a great company, and you are already managing, probably 10 million plus ARR. And things are going good. But what do you do with all that money is another big problem in fintech growth stage. So Amy, I think you would be able to help us with corporate wealth management. And is it a critical aspect of, is a critical aspect of fintech growth, but what should a company do? Like, how do you go with profitability versus reinvestment? Should they invest, and how do you see it when they actually invest into equities other than their own company?
So I'm coming from a bit of a unique lens on the panel where I spend a lot of my time either as a director on boards, very involved in the VC, but ultimately my day job is in the public equity market. So I want to continue to see more of these growth stage companies make it to the public markets because we want deeper, more developed markets in all of our regions. So again, to the valley of death that you talk about, we want to continue to see companies move through that and be very attractive both for global investors to see that there's companies in this region and other regions across the emerging markets that are as interesting as coming out of the US or elsewhere. And one of the things I think was, as it relates to the corporate wealth management, you have to be very strategic with this early on. There's a lot you can do if you're an early stage company to make sure that you're putting that money to work. Really, you shouldn't have that much wealth sitting around or be investing that somewhere else other than your core business. So we're big believers in making sure that investment is continuing to go to your core strategy. Secondly, I think one of the things that has concerned us as we've done due diligence on companies in the past is if that wealth portfolio is so attractive and been so successful, it's actually overshadowing the revenue that your core business is kicking off, that's a problem. Because now where is your focus? Is your focus to be a trader and an investor with your wealth management or your own capital rather than that core business? So again, the core business for us, if it's in the early stages and where that wealth is going, or even if you're in the public market, ultimately you have to be very specific and very strategic with where that wealth is being deployed.
Thank you. And Sonia, do you see a lot of fintechs that are investing outside of their company? This was a question in Taco Stars group, and I was shocked, and then I was like, I shouldn't be shocked. This is actually normal for a B-stage company.
Absolutely, absolutely.
What do you see normally? How do fintechs manage their wealth within the company until they need it, if they have some money laying around?
Well, because when you start raising these larger rounds, because funding comes in chunks, right? For any kind of early stage, any tech company as they raise, it comes in chunks. So it's a big management of cash flow management and a mix between can I get, instead of letting it sit in cash, can I get this cash to work for me? And so we've seen it a lot where putting them in money markets, et cetera, like something safe, because they're taking a lot of risk on one side. They don't want to take any risk with the assets, but definitely it is something that it's something it's top of mind for a lot of people, because you can do something with that and have it, but then you also have to manage your cash flows to make sure it's always available to you.
Yeah, you deal a lot with earlier stage and in Saudi. Can you talk to us a bit about regulation and how they manage to, once they find scalability, how do they actually manage to deal with regulatory issues or,
So of course,
within the fintech?
Just like any other regulated space, it's a core function. Much like any other startup, of course, your customer acquisition, removing any friction from your product, and dealing with all the challenges that any digitally enabled or digitally built product you will face. However, you have that additional drag, of course, compliance and making sure that you're on good terms with whatever your license or permit requires you to do. So it is a good chunk of the capital required, and that's why it becomes a little bit challenging sometimes to secure, because again, you do have a mismatch of the opportunity set within the borders of Saudi Arabia strictly, and then the cost needed. So what ends up happening is that we see a lot of what you would call CVC or corporate venture even from the financial industry, kind of start participating then, and that's where they become really helpful. Of course, it's still very nascent in that sense. So we've seen a few examples of banking institutions that have kind of taken this to heart and kind of adopted digitization and then realized that doing things in-house is not necessarily always the most efficient way to do it. Why don't we use our existing regulatory structure, our existing back office and all that support to invest in some of the earlier stage operations and kind of absorb them and see how that goes rather than spend all that money developing. Again, the amount of activity there still leaves a lot to be desired, but it's nice to see that happen. And I hope more corporate venture would follow suit, because literally when you talk about sizable pockets of wealth, other than government-backed initiatives or government-backed funds, which there's only a handful, that basically are the fuel to the engine that is Saudi venture capital. The other pocket is purely private, large, blue chip, corporate, and often publicly listed companies. So definitely hoping to see a little bit more of that.
Thank you. And Alper, you have done a lot of partnerships with established companies, and you keep doing that as part of your journey. What would you say, what are the strategies should they employ to identify and engage potential corporate partnership? How does that work for FinTechs? Because it's also a difficult balance.
So you can see from my smile, it's not always a very happy conversation. I just want to add one thing because I addressed a concern on the supply side of ventures. On the demand side, I agree that much more funding is necessary. We think, if you've been here for 10 years, what has happened in the last 3 to 4 years is amazing, right? So there's been an amazing inflection point, and there's much more funding available. Still, just a basic, comparison of numbers. The world record for, amount of venture capital funding available per capita is Israel, about $1,000 per person, per citizen. With all this inflection that we've had, we're still at, if you look at UAE, if you look at Saudi, you're at $30, $40, right? It needs to be another zero to be able to for us to say, hey, we have enough supply of funding as well, right? So there's still a problem there to be. On the corporate partnerships, it cuts both ways. I often joke about how I turned gray working with telcos before I became an entrepreneur. I think telcos have come a long way, so has other large corporates. Because I think 10 years ago, when you went to them with a technology innovation proposition, they would say, oh, I can just get that done in India. You just hire a few developers, right? Then they tried their hand, and they saw that actually, it doesn't work that way. It's not that simple. Building a venture is much more than writing code. And even that code has to be written, a certain quality with certain, design elements. And a lot of them failed, right? So now there is more of an understanding that, hey, this is more complicated than it seems. And maybe, and all these startups, they see them as kids usually. These kids out there doing great sometimes. Why don't we outsource and try this out? And thus, there's more of a willingness to work with startups that we see, or with venture studios like us, or venture capital funds that can go and raise money from them, from their CVC arm, or etc. Still, I think we need 5 more years. The API is still not, fully built. When you go in, decision-making process still is minimum 6 months. You're trying to raise money from a corporate, 6 months plus. You want to partner with a corporate, 6 months plus. You want to go build a venture for them, 6 months plus. We've had discussions ongoing for 20 months now, and it had started with a cold call on LinkedIn to me saying, can we meet today? It's very urgent. I said, it was 2 p.m., right? Like, no, I can't meet today. How about tomorrow morning? Okay, we'll be there at 8 o'clock. We'll have breakfast. Great. 20 months later, they're still very interested. So this has to be fixed. And it's not a fault of the people in the corporate world. They're just not measured success is not defined in the terms that we define it in the venture world. So that needs to be fixed still, and organizations like us are
They don't
working on
also
it.
have the urgency of money as well. You are not burning cash, they are getting paid.
Yeah, and maybe I can add to that because I sit on the other side of that table and see it, and I can 100% confirm that KPIs are different, right? So we're looking at different things. Security architecture. I know we were going to talk about security and trust, but partnerships are incredible to get off the ground. But it is finding the right partner that you can get things done with, and you both have at least a similar mindset in terms of what you're trying to achieve. I think the corporates really like to be involved because, again, they don't want to do it within their own organization. You can move faster within the FinTechs with a partnership. But again, you have to really have that, be very, very thoughtful about who that partner is. Because again, we have many people come to us and say, we'd love to work with you, but the security architecture needs, the amount of capital that you may burn just being a partner of ours might not be worth it for you. And it's just reality. It's not, it may be more successful for you to go down a different path right now than to partner with some of the corporates that are even interested in your company. So it is a thoughtful balance there.
If I can add to that too, we've just announced a partnership with a Saudi bank, and for us as a fintech fund, this is huge in terms of our ability to get, it's a strategic thing for both sides. So they're looking to find and discover new fintechs and figure out how to work with them, bank them, and do all sorts of activities with them. And the fintechs are looking for banking relationships for a variety of different products. So for us, we think it's a great marriage, and a lot of banks have been very interested in it. This is the first one that we've actually, have engaged in a very meaningful way. And I think with any partnership, it depends on the commitment that has been done internally in that organization to that partnership or the partnership program that they're working on. Because it takes a lot of time, it takes a lot of energy. As you're saying, the KPIs are different. But if there's clear KPIs on both sides, then it's very clear in how you can consider the partnership a win or it's going well. So for me, I think it's that commitment. We're lucky with this bank that they're very, very, very committed to work with fintechs and their digital kind of innovation internally within the bank. But that I think if we can do more of them, it would be great. It would be great.
And do you have partnerships with entities in general?
It's definitely, I don't want to call it necessary evil because again, the corporate drag is really there, but it is something that we're quite active with. So we typically even have a closed door, invite only networking session for corporates and our startup portfolio in each of the countries that we operate in. Because again, given the funding cycle and just this, again, much like Alper was saying, even though it might appear on the surface that the industry is quite active, it's still a very small percentage points of any global benchmark, whether emerging markets or developed markets. So we do have to rely on these partnerships from a purely existential perspective for these companies because oftentimes they can be a good substitute for getting funding if that partnership is successful and gets things off the ground and ultimately gives more net sales to these startups. So it is something we're quite active in, and again, it's existential for us.
So I want to talk about a bit international expansion. It's inevitable and necessary for this region to look for international expansion and also for regional expansion. First, we need to create regional players for them to become global players, for them to be acquired or do an IPO. So if you can each talk about this region's challenges or the needs, how you, if you can start with how you encourage your startups for expansion.
Yeah, maybe I can just talk a little bit about my experience as a board member. So I sit on a company that has exposure to Pakistan, Bangladesh, UAE, and considering other exposure across the region. And I think one of the things is you start dealing with, I mean, you spoke earlier about regulation. You're dealing with many regulators in each organization. You're talking with different FX implications in every country, different licensing requirements, potentially fixed costs in terms of offices that need to set up in different locations. And it is a challenge. So again, I think there's so much to be had from each one of these countries. I feel very strongly about making sure you're getting everything out of a market before you continue to go on and expand across multiple markets. I think the other thing with expanding across multiple markets, especially as you're fundraising, you do run into investors that only want exposure to one of those markets that you have exposure to. And then what implications does that have for you just from a fundraising perspective too? So just a couple of things to think about as it relates to international expansion.
So this international expansion is something that we all have to solve in this region. Otherwise, there's no ventures to be scaled, right? No singular market is big enough. And we do have this market. If you can think of our mandate as MENAPT, Middle East, North Africa, Pakistan, Turkey. It's $4 trillion, 600 million people. That's quite sizable. It's about, it's what, 20% of US economy. It's quite sizable. Now, in reality, there is no MENAPT market, right? There are too many borders. There's not even one GCC market. So we have to find ways in which the typical venture play doesn't happen. You raise pre-seed, seed, you're in one country. With Series A, you're probably still in that country. You're now thinking about going to another country. You raise B, second country, third country, etc. It puts the ventures here at a great disadvantage. And if you see it from an international investor's point of view, why would you invest in that hardship versus investing in someone in Silicon Valley with a press of a button addresses $20 trillion and 350 million people? We have to overcome that. In fact, it's so important that it's one of our main missions as a studio. We have ventures live across 8 countries. And that's one of the main value propositions that I think venture studios or organizations like ours, being in multiple countries or investors in multiple countries, can provide and must provide, frankly, to give an edge to their ventures. Otherwise, it's just too difficult, right? It's difficult to deal with different currencies. It's difficult to deal with different employment laws. It's difficult that, for every license, you have to have a separate office. It's, there's localization rules, Saudization, amortization, etc. rules. It's just too difficult for a pre-seed or seed, very early stage venture to overcome by themselves. And those that do are a minority. And, it's one of the main reasons that things don't scale in this region. So.
I think with the expansion, it's very, as you guys all mentioned, it's very important, and I agree with everything you're saying. It's very, very important to expand. Our market is big, and the GDP per capita is massive. The opportunity is great, but you have to get to those markets. You have to operate with, and as you said, the borders are tough. The regulation is tough, but I think a thing to consider is that for FinTech, I really do believe, and it's a big thesis with our FinTech fund, is that FinTech is local first in any market. Globals can't come in, or they don't really come in and just plant themselves and do very well. They've tried, and they'll do like some business, they'll take some market share, but I really think FinTechs are local first. There's idiosyncrasies with each market that's very unique to those markets. There's the regulatory issues. So once you grow across the market, then you become very interesting for a global FinTech to come in and acquire or invest or et cetera. And so it's something that you have to do at an early stage and just maneuver. And I think to realize is the localization of each market is very important. Like when Kareem came in a long time ago and they were expanding from one market to another, they expanded to Saudi. And they did really well in Saudi over Uber per se, because they were allowing cash payments, which Uber was not doing at the time. And they were allowing you to pre-book, because some women needed to go every day and do one ride every day with that driver, and you couldn't do that. So that was like, okay, automatically I'm going to go with Kareem. And so those were 2 small localizations, which put them ahead of the global, because they didn't know the market well enough, and they weren't able to do well enough. So the localization into each of those markets, I think, is very, very important, and it's something that we can do, and the homegrowns can do better than anyone else can.
Definitely. I mean, the issue of a fragmented market is front and center with any venture capital type investment within the MENA region. And I'll just use Flat Six Labs as a case study. We have a dedicated fund, a dedicated team for each and every country that we operate in because of that fragmentation. Had it been a bit different, that wouldn't be the case. But again, that's a cost, and someone has to bear that cost, and it is the investors, unfortunately, at the end of the day. But also, it is the investors that also have, tunnel vision when it comes to looking at the local market and kind of not recognizing the scale of the region at the end of the day when it comes to, one single market. I think definitely that's a pipe dream, frankly speaking, within our lifetime, it seems like. I hope I'm wrong in that sense. But we definitely hope that there's more efforts in terms of easing doing business, at least for early stage companies that don't necessarily have the financial resources to expand. And again, at the end of the day, we are talking about digital and technical products that without that friction, they can scale rapidly and very quickly. Again, assuming, of course, they understand the local nuances that the user base needs. So it's definitely something I would hope to see during my lifetime, but it is a real problem. Any founder coming into it needs to absolutely be aware of how large their local market is and what they in reality need to go beyond their borders, even if it's just within the GCC or within MENA. And it is, I think it makes our founders a bit more resilient, frankly speaking, because it is a very unique challenge that is not often faces in some of the other, of course, developed markets, but to a lesser degree maybe in emerging markets as well.
And who would you see as a example case study for a great fintech in growth stage that does really good growth hacking and and also fundraising in this region?
Yeah, there's a few that are doing really well in this region. It makes you very proud to see them grow. Tabby is a great example. Tabby is a wonderful example that have been able to expand into different markets, do it well, get a good local team that understands that market, do it really well, and operate profitably. At the growth stage, I think it's very, very important to emphasize profitability, to have companies that are profitable. And because you can spend the money, you can raise the money, you can get the top line, but you need to grow with a profitable company. Another one that is kind of under the radar that people haven't noticed much is the Shopify of Saudi. It's called Çelen. There's Çelen and Zid, and they're competitors, but Çelen is a company that has not raised much capital at all. I think it's done one primary round and it's raised very little, like sub 20 million, and is growing extremely fast and extremely well. It's because it became profitable very early, and was able to expand with their own funds. And given this market that we're currently in, I think that's the name of the game: be smart about your growth, make sure the growth is profitable. And then so that you can actually fund a lot of your growth yourself.
And so, I mean, as a wrap up to this whole discussion, I will summarize what we have discussed. But before doing that, so basically we have discussed how partnerships are important, but needs to be on a balance with the big banks. And they do provide security and data support to fintechs, but at the same time, you need to be careful about what you are doing. And not overshare, but keep the partnership in a fast pace if you can. So you don't wait 2 years to do a partnership. And so you need to keep alive. But once it's done, it's actually it does support fintechs. So have a good partner in your own company as well. That can help you with different sides of the business. And we talked about international expansion, but first acting local and understanding your local markets. And regulation. Of course, fintech is all based out of regulation, and you need to be aware of your regulation in your country, but also within the GCC and even in Pakistan and Turkey. And what else did I? And funding, of course, with corporate wealth management. So corporate wealth management is actually something to consider on growth stage, because you will have a lot of cash laying around, but you will also need to keep a balance of that and make sure you really manage your cash flows and your wealth management strategies. It shouldn't be higher than your own operations, and you shouldn't be taking risks. This is something that you are trying to hedge your risks against, not try to make a profit out of. So this was a great panel. Thank you, guys. But to wrap it up, I would like to ask you, what is your suggestion on killer fundraising from going from seed to B to C? What have you seen as a great practice? What should the founders do to reach to Series C?
I'll be a bit cynical and say that the best thing you can do is get that first investor and have them help raise for you. Because it's really, in the emerging markets, there are not that many conviction-based investors.
I'll just add, I'm hopeful that I think there's a good hybrid solution somewhere in the future that still doesn't exist. To the point that there's not enough space there in that B2C area, and your early investors you're going to count on a lot. I do think there's new models that is not the Silicon Valley model that's going to help us to bridge and see more growth in some of these regions that we still are working on and still have to create going forward.
I guess my suggestion or advice is that keep your head down, work really hard, work on your numbers, and build a good company that people want to invest in and are dying to invest in. And it doesn't matter what the market is for the most part. As long as you're doing well and your numbers are good, you will get the funding.
I would add to all of that, which is a little bit counterintuitive, I think, for most people, is don't shoot yourself in the foot with having a really high starting valuation. We've seen that a lot over the past 24 months, 36 months, of course, with the global bubble, but having a 10, 20 million valuation at the idea stage in a regulated industry without even having a clear path to getting regulated, the math just doesn't add up. It doesn't math. No one's going to be making money off of that. So again, the cliche goes, it's a marathon, it's not a race. So building up the valuation is definitely the way to go, and it needs to be based on your actual cash needs at each stage. And that's how I would approach it. And best of luck to everyone fundraising in this environment.
Thank you so much, everyone, for listening. I hope you enjoyed it as much as I did. Thanks a lot. Hopefully, unfortunately, we are done with time, but if you have questions, we will be on the back. Thank you.